higher charging of interest rates should lead to profitability.
India would be the market where the interest rates are the lowest.
There is a fair bit of commentary which talks about how many new to credit customers am I onboarding.
I think this was a sector which was specifically targeted towards NBFC MFI.
The removal of the lending cap has the microfinance institutions were more disciplined because even if the regulatory cap were removed. So, Mr. Misra, why don't you start the proceedings by sharing your views whether the removal of lending caps have made the MFIs more disciplined or.
Thank you. I think you are referring to interest rate?
Yes, yes.
Okay. See, let me first set the record straight. The deregulation of interest rates in India started in 1991. And even savings rate and small loans deregulation, everything was completed by 97. By 2022, you were in a situation that in India, entire financial sector of 300 lakh crores, only 70,000 crores of NBFC MFIs was under interest rate control. And NBFC MFIs had only 35% market share. Banks, small finance banks, mainstream NBFCs, no interest rate control because it was left to the board. And that's what the Indian financial sector thinking has been since 1991 reforms. To say that 35% of microfinance sector interest rate cap removal has led to problems, I think that's completely far-fetched. That's first of my opening remark. And the other point, let me also tell you that when we, in 22, if I take you back to April 2022, the interest rate average, weighted average lending rate of NBFC MFIs was somewhere around 24%. And today, when I speak to you, all of our MFIN members, including all the panelists who are sitting here, the weighted average interest rate, which is displayed on our website, is 23.62%. So where is the problem that I am not able to understand?
So no, I didn't say where is the problem. I said, do you think that the sector has become disciplined, more responsible, or some of the institutions are taking undue advantage of the situation?
See, interest rates have remained same, as I explained to you by giving the data. The other part is, if institutions, just because they have the freedom to charge higher, they start indiscriminate lending. So there have to be two consequences. One, in India, the market, any district, if you go, there are 18, 15 lenders there. So you don't have that competitive edge that you will start charging 30%. If they start charging 30% or Saturn start charging 30%, they will not get market. Second point is that higher charging of interest rates should lead to profitability, higher profitability. No? But if you look at last 8 years return on asset of the top 10 NBFC MFIs, it is the return on equity is 1.8% and return on assets is 1.8% and return on equity is around 8%, which is equal to the risk-free rate of return of Government of India bonds. So on that count, I will not agree that that led to any problems with that.
Fair enough. Mr. Saad, Mr. Misra talked about that a lot of lenders' competition ensured that nobody is charging more. But at the same time, India is a credit staff society and MFIs lend to the bottom of the pyramid segment where formal finance has not reached, and even if it had reached, it charged exorbitant rates. So from that point of view, do you think the sector was more responsible following the removal of the lending rate cap?
Yeah, I think responsibility of the sector in terms of promoting financial inclusion, taking the credit to the last mile, you can see from the numbers itself. I think in 2010, before I think you were referring to a rate cap, it came after the Maligram committee. The whole of sector was around 20,000 crores of asset under management. Today, just before this year of a little bit of a low disbursement, the industry was at around 4.4 trillion rupees, 4,40,000 crores. So, and 8 crore households were serviced by a microfinance industry. So, I think from a purpose of taking the financial inclusion to the last mile, the industry has done a great job. And I think thanks to the government for providing that platform. I think Jan Dhan account, Aadhaar, mobile, all of these were really, really good tools to take microfinance to the last mile. But I think the discipline that you want to judge of the microfinance industry, I'll tell you, this is the only industry, and more particularly NBFC MFI industry, which is submitting credit bureau data on a daily basis of 8 crore loan accounts. 8 crore customers, loan accounts would be around 12.5 crores on a daily basis. And this was done voluntarily without any stipulation from the regulator. This was internally with the SRO's kind of initiative. We decided to submit that data to ensure that we know what is the exact outstanding of the borrower and what's the credit behavior of the borrower. So that's the amount of responsible lending. Coming back to the part of the interest rates that you're talking about, I think we have to put that into context. If you look at globally, and I'm talking about the microfinance globally, be it Bangladesh, be it Latin America, be it Africa, India would be the market where the interest rates are the lowest. And this is despite we don't have the benefit, especially the NBFC MFIs, don't have the benefit of taking deposits. World over, there is deposits available to these non-banking companies, and they are able to charge much higher rate. Latin America, the rates are 49, 50%. So I think not that we should be charging that, but the industry has been responsible. And RBI has been very proactive. And it has not overnight they have reduced, taken away the cap. It is a progressive move. Earlier, there was a 26% cap. Then it moved into a regime of margin, incremental margin, that 12% margin.
Cost of funds, yeah.
And then it removed it. Understanding the industry has matured, the SROs are there who are playing a responsible role. So there was an appropriate time to do it. And I think industry now is pretty much ready. It's well capitalized to kind of price the credit correctly. And RBI has given a very good formula. Your cost of fund, your credit cost, your operating cost, plus your reasonable margin.
Right.
And that should determine. And I think everybody is doing it transparently. That's what you want.
Right. Mr. Singh, in this context, how do you see the RBI embargo on a couple of MFIs because of RBI clearly said that exorbitant interest rate charged to the people who are at the bottom of the pyramid?
See, exorbitant is again a word which is, it can be misconstrued in any possible fashion, depending on the side which you're on. If you really ask me, technically, whatever rate we are charging, if you actually look at it, there are two sides to it. A 5% rate of increase technically translates into maybe a 10 rupee interest or maybe a 10 rupee installment increase in the borrower's repayment schedule as such. Now, at that level, bottom of the pyramid, where majorly, I think they are into retail lending, they are into, the kind of enterprises, what they actually do it. The margins are close to about 400 to 500%. 5 rupees, 10 rupees does not make any difference. So I think, that's the context which probably people are not able to really understand, And when we talk about this, this ultimately the market dynamics had to take over. You cannot grow an industry with your hands tied behind your back. So if you have a cap, the cap will be not conducive enough for the industry to grow. I think the moment the cap went off, I think it actually meant the market forces and the dynamics would come into play. Now, which will also lead to the way you handle your cost of funds, how your liquidity pans out, and the way you really want to charge. So it's a combination of all these factors, put together. But overall, if you really look at the complete, dynamics of how this has evolved, I think, this was a very positive step towards increasing inclusion, And I think it's not just a mere word which has been done, In fact, I think if you really look at it, RBI to create a specific license was probably the need behind it, And that was entirely why inclusion actually came as a mainstay at the bottom of the pyramid.
Right. Mr. Srinivasan, in your analysis, do you think MFIs are running more behind bottom line than top line. Earlier, the narrative was, we have to grow, we have to, expand the accessibility of credit throughout the country. But over the years, do you think that they are more profit conscious now?
As any industry matures, you would start becoming more and more profit conscious. So that's true for every industry, including microfinance. But for a vast majority of them, touch wood, as I see it, the focus is of the company owners, of the management, is towards increasing financial inclusion, increasing getting people more onto the formal lending model. So that objective still remains. Yes, we can possibly say that, possibly last couple of years, the growth has been a bit too fast, and that's caused a little bit of hiccups, given possibly some mistakes happened at entities level, some challenges at the macroeconomic level, all sort of came up around the same time. But fundamentally, the business focus has remained on how much of more inclusion can you do. Today, if you really look at, let's say, a lot of entities are listed on the MFI space itself. So if you look at the analyst presentation, look at the commentaries that they give, there is a fair bit of commentary which talks about how many new to credit customers am I onboarding. So you are clearly saying that the focus is there on that particular segment. Profit focus would come as entities scale up. End of the day, as an NBFC, you need debt. And for you to get debt, you also need to have your operating metrics in a good shape and size for lenders to give you money. So from that point of view, yes, profitability has become important. And in that role, the last couple of years, direct assignment has been a very good tool. It helps to an extent de-risk the on-balance sheet exposure. Because of the accounting rules, you're also able to sort of improve your profitability. Though we as analysts, we look at it with a different lens.
Right.
But largely, at least, it does help the overall sector get some ability to mobilize funds and then scale up and further improve on its stated mission of improving on the financial inclusion.
Since Mr. Srinivasan, since you're an independent analyst, so I want to seek your view on the issue. The MFIN guardrails recently, they have talked about 3 lenders per borrower. I mean, 2-3 years back, when RBI talked about this, they were talking about 2 borrowers two lenders per borrower. So, NBFC MFIs, yes, NBFC MFIs. So so MFIN is now talking about 3. So it's a dilution of what RBI proposes. What is the optimal? Do you think
it's really, see, it's very difficult to micromanage a business outside and sort of run. 3 lenders, you need to look at it from just take a step back. Over-leveraging has happened in the sector across the NBFC, nothing only specific to MFI. Let's be clear on that part. So over-leveraging has happened on all. Yes, this segment is perceived to be a little bit more vulnerable to economic shocks. So to that extent, maybe the risk gets amplified. Now, how do you see 3 lenders? You have some entities, let's say in the past, 3 lenders or 2 lenders means only NBFC MFI. I'm not bothered about a bank loan. I'm not bothered about a 2-wheeler loan. I'm not looking at a home loan which have been taken by the individual. Then the concept of, is it loans at an individual level or at the family level? So if you look at it from those perspectives, to some extent, over-leverage has happened. Now with the SROs saying that we need to tighten up on that, so that will obviously have some pain. Now, somebody who has availed, let's say for an argument, 5 loans from 5 different lending institutions, now suddenly everybody, all the lenders come on the same page and say, no more than 3.
Right.
So 2 lenders need to be paid off, and the other 3 lenders need to take a call that, will I give extra to this person? Somebody may say yes, somebody may say no. So there's a high probability that some of these borrowers may not be in a position to refinance their earlier loans. There would be some stress that would be visible for some period of time.
Right.
From a 3-lender point of view, now that it's really become applicable from 1st April, as you started, possibly the whole crisis. The current crisis started 1.5 years back, so
Right.
hopefully we are at the end of it. And then
I will
most of the
come back to
problems
that. I
already
will come
solved.
back to that.
Yeah.
But Mr. Mishra wanted to interject. I understand. Your view, sir, do you think 3 is the optimal level, or you should go back to the RBI suggestion of 2?
See, first of all, RBI was two NBFC MFIs. So in that regime, when the NBFC was two, because as I explained earlier, the NBFC MFIs have 35%, 38% market share.
One third,
So if you would go to a borrower, the borrower would have 6 lenders, 2 banks, 1 SFB, 2 NBFCs. So now that all are part of us, we have made it 3 composite.
Okay.
So it can be 3 bank, it can be 3 NBFCs, it can be 2 NBFC MFIs, 2 NBFCs. So it is a drastic reduction. And let me, on that point, also give you a data point. Thankfully, last night, CRIF has, the Credit Bureau has given me September data. So the guardrail says that not more than 3 lenders, irrespective of legal type, whether it is bank, SFB or NBFC MFI. Today, 97% of microfinance clients, which are 7.4 crores, have less than 3 lenders, 3 or less lenders. And the portfolio outstanding available with them is 91%.
Right.
And 71% of clients, loan outstanding, microfinance loan outstanding is below 1 lakh. But still we keep talking about over leveraging.
So you're saying the over leverages have come down significantly.
See, as Karthik was explaining, I think probably he did not get to flesh it out. This is the only sector, even if let me take you figure of, again, Credit Bureau's figure of March 2024. So today, as I'm saying, 97% clients are within 3. That time it was 91%. So 8-9% clients were having more than 3 lenders, even at that time, and even in terms of outstanding. So the problem was not that which was made out to be. And the problem in over-lending, which happens, I don't think we have time, but it is not due to the intent of the institution, whether it is bank or this. There are various policy gaps, whether it is the absence of a robust KYC, whether it is the dark side of SHG loans sitting in the loans, whether it is the other NBFC retail loans which are sitting into there. So it is... You give me an example, again, in the interest of time, I will not get into the detail, that any sector of lending 50,000 rupees average ticket size loan, unsecured, has a more robust credit underwriting than MFIs.
Fair enough. Fair enough. Mr. Srinivasan also said that once the company grows, it's natural, the objective will shift, the focus will shift to bottom line. But Mr. Syed, what explained the contraction in the overall NBFC loan portfolio according to you?
I think 2-3 things. One, of course, there is kind of a perceived higher risk and also actual delinquency that is there on the ground, maybe from a macroeconomic reason, certain events like elections or certain events like floods, all of that contribute to it. Because of that, people are a little bit conscious. The second is also a flow of fund. The flow of fund, which was freely coming before, has comparatively reduced. And I'm not talking about my organization alone. Like we have been able to raise funds, that's not a problem. But many of the smaller organizations which were raising fund, they have not been able to get that kind of facility. And it's a kind of a vicious cycle, because if you don't get fund, you don't disburse, the cash flow at the bottom of the pyramid reduces, the customer also doesn't have enough cash flow, so her cash flow gets disturbed. So it has an impact, and when the customer is delinquent, then of course, as per the regulation and as per our own credit underwriting policy, we don't lend to those customers. So that's why I think the business is slightly lesser. People are focusing more on retaining their own good customers and ensuring that the portfolio that they are managing remains stable. So that's why the growth is not there. Unfortunately or fortunately, the microfinance portfolio itself is designed in such a manner, it runs off very fast. So it's a 2-year loan, mostly weekly or maybe monthly, and it's a fast repayment, so it runs off fast. So that's why you would see that there is not much of growth in the AUM. And there is kind of a good, like lesser disbursement as compared to earlier. But I think I was overhearing your conversation, of course, previous like 2-lender or 3-lender thing. I think we need to put this in right context. Microfinance gets blamed unnecessarily. We were in financial inclusion space. We were the people who got these customers into the formal sector. So whether microfinance are responsible for overlending or somebody else is eating my cake, that is what we need to evaluate. Like if there are 3 lenders, who's the 3rd lender, who's the 4th lender, who's the 5th lender? We need to evaluate that. I think just blaming microfinance institution.
I will come to that. I will come to that.
I think that's important to understand. And also, I think one thing also we need to understand, just because like it's a kind of a prevention tool that MFIN has put in, that okay, not more than 3 lender. But if you look at analytically, 2 lender does not mean that customer is less leveraged. 3 lender does not mean it's over leveraged. It's relative to the income of the borrower. If the borrower's income supports, then he is sufficiently leveraged. If it does not support, even with one loan, he is over leveraged. So it's 2-3 is just a surrogate norm. The right thing that RBI has done is to put a FOIR concept. There is a fixed obligation to income ratio. So if you have a certain income, the FOIR should not be more than 50%. And if anybody is lending more than 50%, that is over leveraging.
Right. Mr. Singh, what explains the fall in the portfolio size of the microfinance sector?
See, I think it's a combination of a lot of factors, and not just can be looked at just purely one. See, after everything, whenever there's a kind of a crisis and everything, I think the first thing which happens is the liquidity starts drying up.
Right.
And that's a very, very big misnomer in terms of how you're viewing the sector as such. And suddenly you find the lenders developing cold feet of not lending. Now, for us, the raw material is only this. There's nothing else we can do. We don't have the liberty to do deposits or anything. See, look at how SFBs and the banks are placed right now. Since they have an option, everybody started reducing the microfinance portfolio. We don't have an option. Our option is only limited to the factor that for us, as long as we start getting raw material for us, we'll be able to lend. And I always feel, that's probably, I think, Mr. Misra is going to hate me after this, because he has associate members who are banks and all. I think this was a sector which was specifically targeted towards NBFC MFI. The moment you have a lot of other players jumping in that, I think, now they're on the same page as what we are. But I think, before that was like, today banks have the liberty to actually take a customer into some other fold if it's an existing customer. We don't have that liberty. Today, if my existing customer who's paid good, who's absolutely fine, the moment he gets out of that FOIR norm, the moment he gets into any kind of a tangle, I can't do anything about it. For me, it's a non-qualifying asset. Now, that's probably a big factor which probably there's
Sorry, I didn't get you, I think. Are you indicating that only NBFC MFIs should be present in the sector?
We're not saying that, but ultimately it should be restricted the way it was restrictive towards us. Now, I think it's on the same page, but the idea is we don't have an option for us. It's a qualifying, non-qualifying, the criteria of 60%, everything, we've got that. Nobody else has that,
Right.
So once that level playing field becomes a little uncomfortable, I think, the growth will always take a beating,
Right, I understand. Mr. Srinivasan, why do you think banks are developing a cold feet, as Mr. Singh was saying, to lend to the MFI sector?
As Mr. Singh said, NBFC MFI, to put it very simply, it's a single product company. That is what you've given a license to do. If you look at a bank is a multi-product entity. They have the flexibility to move from corporate to retail to infrastructure to agri, whatever they want to do, depending on the flavor of the season, depending on their risk appetite, they can take that call. Today, they are saying that there is a stress in this portfolio. So let me just be a bit more cautious. Let me hold my horses for a couple of quarters. And they're slowing down on the disbursements on that side. And again, this particular asset class is a short tenor asset class. What couple of years back was only 1 year, now on an average is about 18 months to 24 months kind of an asset class. So even if you don't do anything, the asset runs down very fast.
Right, that point has been
And
made.
when
yeah.
they are growing, and today the growth for the banking sector is coming from home loans and other retail loans, and those are really long tenor assets. So when you look at a proportion basis, the proportion of MFI on the books of bank, that proportion starts coming down.
Right.
So maybe once the sector sort of stabilizes or revives later part of this year, you'll probably see banks come back into the sector as it's a good, a risk-adjusted return that they're getting from the portfolio.
Right, it's a profitable portfolio, so they cannot completely wish away. So we come back to the main question that we are asking Mr. Misra. When do you think with the end of the cycle now, the worst is over, or there is few more quarters to go?
See, worst, it is a relative concept. There are two parts to it. Somebody will look at portfolio at risk 180 days and beyond. Somebody will look at 1 to 60. Somebody will look at 1 to 90. So one is 180 plus is the impact of past. So that figure, I will focus on 1 to 90 days and average delinquency in month on business. If loan is seasoned for 3 months, 4 months, 5 months. So that is clearly coming down. And if the disbursements would have been normal disbursement, I would say in a quarter, around 80,000 crores, which have come down to 60,000, 57,000 crores.
Quarterly disbursement.
So that's why, because of the denominator impact, it is still looking high. But if it would have remained at that level, it would be normal. So in short term, the new business which is being written is returned to normal, but the long-term impact will be there. However, because as the other practitioners were telling, the NBFC MFIs primarily dependence on bank funds, 75 to 80% on the sector as a whole. Large institutions may have diversified sources. Liquidity is the key right now. If liquidity doesn't step in, the momentum which has been gained can be frittered away. So I hope the liquidity steps in. We are talking to the government about the guarantee scheme.
Yes.
If that gets in, I think as far as new portfolio is concerned, worst is over.
Can you explain in a bit that what are your asks to the government, to the audience? What exactly you are asking for the government, if you can explain to the audience?
See, what we are asking is like in COVID, in 2021, the banks again went into a sell in lending to the NBFC, and there was, you will remember, there was a double whammy on NBFC MFI. That on loans collection from borrowers, we had to put moratorium, but on repayment to lenders, there was no moratorium.
The entire NBFC sector faced that problem.
The problem. So the government came up, Department of Financial Services, with a 7,500 crore guarantee scheme that to give confidence to banks that if you lend to these players, in case of default, the government will, major part of it will cover.
Yeah.
And to the credit of the sector, even from that COVID time, not a single money was defaulted, and the banks got all back the money, so there was no fiscal impact. So we said to the government, now the situation is much better. If you can institute a larger guarantee fund, say 20,000 crores, which will kickstart the virtuous cycle of funding, give confidence to the bank, and there is no fiscal impact also, because hardly there will be any default, so your money will also come back. So that will start the virtuous cycle. So
Right.
that is under active consideration. We hope that can be expedited, and then if that happens, then things will get back to normal. It is already
Great.
normal, the momentum will be sustained.
What has been your experience? When do you think the cycle will turn?
So, Manoj, I think we are already witnessing a turn of the cycle. I think, as we explained, the whole episode was linked to the macroeconomic situation and certain events. If we look at currently, I think the inflation has gone down. The crop has been really good. The rains have been really good. So because of those good crops, the vegetable prices have also gone down, because of which the affordability of the rural household has improved. And as the disbursement also improves, and as Alok sir is saying that liquidity is infused from RBI and the banks lend, more and more cash flow improves at the bottom of the pyramid, definitely I think the collections will also improve. Personally, we are witnessing better collections. We are witnessing better disbursements. So the trend is towards the positive. The only thing is that earlier crises have been slightly shorter, 6 month or a 3/4, but this has been a little bit prolonged because there are multiple events which have happened. But otherwise, we are witnessing much better disbursement, much better collection, And also, we are witnessing a better portfolio which we have disbursed after the guardrail. So
Guardrail.
that is definitely helping us to recover faster.
Right. Mr. Singh, the guardrail helped in stabilizing the asset quality?
See, for us, I think we were a little different. We brought in our guardrails, maybe 2 years back.
Okay.
I think that's why our portfolio quality was practically under check, and that's probably evident on record, But having said that, I think, we've also enumerated during this period of time in our earnings call and everything. We are in fact opening 400 branches now. Now, when we say 400 branches opening at this particular juncture means that the things have come back to normal, means that the growth is coming back, means that whatever was happening because of guardrails being put in, because of all these factors being there, Mr. Misra talked about the credit guarantee scheme and everything, we're hopeful that we'll get it. I think, for us, it's the mindset, which has to probably change, That mindset is probably undertaken, we've taken that leap forward, that since everything is coming back into shape, the PAR 1 to 180 has gone down significantly. If you look at Q1 and Q2, in fact, there's a difference of about 2% between these two quarters as such. So if these shoots are coming in, if these things are coming in, I think it's only a matter of time before we finally be able to see the not the kind of unprecedented growth which we've seen earlier, but I think the kind of robust growth which probably will be there, and it's going to happen.
Mr. Srinivasan, the industry players are saying that the worst is over and the cycle has turned. Does your number crunching shows that?
We do believe worst is over, but are we going to come back anyway close to the highs that the industry saw a few years back? I think that is some time away. We have seen a degrowth in the industry AUM June over March. Our estimate basis, couple of numbers which have come, maybe September, maybe further down. I really don't have the data, but in all likelihood, the September AUM could be slightly down than the June numbers. So with 6 months having gone, to in all likelihood, growth in AUM for the current year will possibly only be in single digits. With credit cost coming down going forward, maybe last year the industry reported net losses. This year, our estimate is maybe 1% ROA, somewhere in that vicinity is where you could see the industry. Maybe next year it will go up to 150, 160. But 2 years back, 2023, 2024, we saw ROAs of closer to 4%. I think that is some time away.
Yeah. So, Mr. Misra, you're saying that asset quality is improving. The next is when the industry come back to growth. So, what do you see?
See, in growth also, as Karthik was saying, that while others have also said that the portfolio have degrown because we reached 4,33,000 crores in March 24, and he was telling about September. The September figure is 3,40,000. So there is a degrowth of 21%. But what has become nuanced in that, that if you look at maybe Muthoot or Satin, you have to look individually. Maybe their growth momentum has not, or their portfolio has not dipped, or credit access, they continue. In between, middle players have sunk. Some have gone down by 60%. So when you talk about these overall numbers, this is industry as a whole. That is like taking the height of person sitting in the room. But somebody might be, Mr. Singh might be 6'4". So you just can't say that everybody is of that. So that problem, it has become accentuated in this downturn cycle. So your question was, do you think the AUM keep growing up? I think the individual differences will accentuate unless liquidity comes in. If liquidity comes in, we will again come back to a stage of where the rising tide is lifting all boats.
So in that context, the guarantee is also important.
Yes.
I have one question from two microfinance institutions who are there. What is the road ahead of the MFIs? Do you think converting to a small finance bank is an option which you consider seriously?
As a institution, we can firmly say that we are not in the race for becoming a small finance bank. I think we know that this is the business that we know better. And RBI has recently kind of liberalized in terms of qualifying asset criteria. It was 75-25 earlier, now it is 60-40. So you have more room to innovate and do more businesses. So we have recently launched individual loans for our customers, and it's doing well. So we will innovate within that space, might not dabble into SFB business. It's a different ball game altogether. And we are seeing things improving, growth is back, credit cost is going down. So I think you don't change your business over 1 year or 2 year
Right.
issues. Yeah.
Mr. Singh, I was asking this question because RBI has showed huge confidence on the microfinance institutions, which is they have allowed MFI to become a universal bank. They have allowed several MFIs to become SFBs. So from that point of view, do you think conversion, transition to the SFB is an option?
We are very happy doing what we want to do, and I think we love that, And honestly, for us, I think, you don't want to put more pressure on us, by converting again into an SFB and then get into the ball game of liabilities and all that stuff, That's not what we've been made for, That's one. The other factor, we as an institution, we've got 2 subsidiaries of ours which does MSME lending and housing finance, So we've got options to do that. And as what Sadaf said, definitely yes, by the qualifying and non-qualifying norms being coming down a bit,
Right.
I think we've got more options to do that.
Diversification.
But having said that, I think, one thing which I would probably put it across, and I think, I hope, we all agree on to that, but I think we are best suited to do microfinance, We've done it for our lives, We know what to do in it, We've in fact done what possibly has not been done by anyone, I think if you talk about financial inclusion, not just speaking on the stage, we have actually done it.
Right.
If you look at if you look at our borrowers, definitely yes. You can talk about negative connotation always is the best connotation which people love to hear about. But I think if you look at the positivity, employment in terms of rural employment, we've got a huge field force. We've got borrowers, who possibly would have never ever dreamt of getting this kind of a money at this kind of an interest rate. So
Right.
I think let's gloat over the positive which have happened rather than, spending a lot of our time talking about negatives because negatives don't give you anything,
Right.